Welcome everyone. Let me know if you can hear me, if my sound is loud and clear enough. Just double check it briefly. I think we should be good. Right, guys. Are you good? How have you guys been? How have you guys been? Where are you watching me from? As usual, you know I always like to know where you're watching me from. Which part of the world are you watching me from? Namibia, Nigeria, Ghana, Uganda, Germany, Ghana, Kenya, Dubai. It's amazing, it's amazing, it's amazing. It's amazing. All right, guys. Ethiopia, Lesotho, Kenya. That's beautiful. I got all of you awake at 6 a.m., 7 a.m. In fact, if you don't mind, tell me what time it is, where you're watching me from. Is it in the morning, afternoon, evening? What time it is? Is it exactly? Poland, all the way from Poland, Swaziland, motherland, Ghana, Kazakhstan. Wow, that's amazing, guys. Anyway, today we have so many interesting things to go over. It's been a while you saw me on live stream. I know you missed this live stream, but yeah, that's why I'm here today. Somebody says it's 6 a.m., 8 a.m. So the average time is, I think, 7 a.m. 1 a.m. Wow. So you're awake at 1 a.m. It's pretty interesting. 9:30 a.m. All right, guys. Let's get right into business. So, like I said, it's been a while. I came on live stream, but there's just been a lot going on in the market quite recently. Especially for the first time, you guys saw with BTC, right, where BTC is trading now. And if you've been on this live stream for all the times that I joined, right, all the times that you saw me live, right, you should have picked up on this already, right? You should have picked up on this. I think it was in it's in one of the live streams. If you go to Exness's live stream, I think that I literally took time to delve deeply into BTC and my perspective of where I expected price to trade at, right? And then we imagined that what at that time price was still trading around here. Who remembers that live stream though? Let me see the loyal people who have been joining all the time. Let me see the loyal people in the comments who have been joining all the time. Who remembers that live stream when I said that I expect BTC to come tap into that range and then head straight to 150, which sounded overly ambitious, right? You can see that the 150 is already there. Sounded overly ambitious, but today here we are with BTC having crossed 120 already. And if BTC is at 120, 150 is just like a child's play, right? Obviously, the market didn't want to just go all the way straight like that and tap into that range. And so it's just like lingering around, right? If I play this, perfect execution, right? Very, 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 very perfect execution. I can show you that here. If we go quickly to Exness, right? If we go to the channel, go to the live streams, and then you come all the way. I should think it should be this one. So much such that, right? Yeah, this was it. When we were breaking down BTC, we said it was going to go up. I think it was several live streams, actually, not only one, right? It was several live streams that you can jump. We anticipated Bitcoin, tapping into that 70,000 range and then going up, and it did exactly that. So it's amazing to see, and I think that's just why you should always take whatever we share here very seriously, because like it can be very life-changing for you. This is not a financial advice, by the way, but this is just to get you a good perspective to position yourself in the right direction. And so yeah, it's interesting to see, and I anticipate that the market is just gonna cool off, slow down a little bit, and then eventually gain momentum back up to that 50,000, 150,000. And I gave the true perspective of why I expected that, right? And I used my simple fib logic, right? And then other combinations as well. So I actually did hide some of the settings, but let me just bring them back up for perspective's sake. Do you see? So I introduced a negative 61.8 retracement level, which is a very powerful retracement level. So prior, BTC had made these highs, right? Traded all the way down, came back up, broke that high, and then started forming this wedge formation right here. Very huge wedge formation, right? You can see here, goes up, come down, goes up, come down, goes up, come down, right? And then eventually broke that huge wedge formation. So when you see a wedge formation like that, you know that what the resultant effect is an upside trading setup, which is exactly what I shared for people to anticipate. We took this trade as well, right? And then BTC made this huge high. Then it started retracing, and when it started retracing, I didn't anticipate it to go or tap into any bit of a range than this particular range right here, right? Because that's like what a classic break and retest type of logic. You get what I mean? So broke this resistance range, went up, came back to retest it. So at the time where we're discussing, right? At the time where we're discussing, then Bitcoin was already around this range. So what I then did was that I kind of postulated the potential retest swing point, right? After I hit that swing point of the retest, and I needed extra tools to back that up. That's how come I plotted my Fibonacci from the 0 point, which is the swing low, to the swing high, and then measure the retracement. And so the market looked like this at that time, right? And then the only point, psychological level, that the retracement was hitting on was this 50,000 range, which is a negative 0.68, which is what, negative 68 extension, right? Fib extension. So retracement is 0 to 100, and extension is anything above the 0, right? Just like when the market comes back to the previous retracement region, right? How far can it extend? So this is the range, right? This is the range. The market went up, it came into this region. So if it goes back up to this level, how far can it extend? The extension, Fib extension, is a tool that guides you with potential. And I use Fib extension for also take profit as well, right? I use Fibonacci extension for take profit as well. So it's coincided exactly around the 150,000. So I didn't choose around 150 out of pride, out of ignorance. It was well calculated and well chosen, right? People are complaining about the sound being low. Let me just check it briefly, because to my best of knowledge, nothing has changed from my end with the sound, but give me a second to check that for you. All right, give me a second to quickly check that for you. Okay, I think it should be good now. The sound should be perfect now. Guys, let me know if you're getting the best of sound at the moment. I think it should be. Yeah. Right. If the sound is good now, and then we've broken down BTC, then we can move on quickly to the next instrument. So, who has a problem here with like my perspective and insight on BTC? Who has a doubt? Who has a problem? Did you see it clearly? Is the explanation perfect? Does it make sense? So not only can you like CFD trade Bitcoin, you guys also know that you can invest, in it if you just like holding the coin itself, keeping it in your cold wallet or your exchange or whatever it is. Again, remember, this is not a financial advice. This is purely for analytical and entertainment sake. So yes, this is like my perspective to eventually see Bitcoin rest off at 150,000, which is going to be very wild to see. It will make Bitcoin perhaps surpass so many instruments or so many asset classes as the most valuable assets in the world. Quite recently, it did surpass, if my memory serves me right, is it either Amazon or Apple, right? In terms of like market cap or capitalization, because I remember that their capitalization is like $1.4 trillion and some figures behind it, and then Bitcoin, after it hit the 120,000, then its global capitalization became 1.42 or something. So it passed by just a bit of dollar efficient, and then Bitcoin became valuable. So it's sitting at, if my memory serves me right, either fifth or fourth most valuable, and then number one still stands at gold. And I think it will probably take a while for Bitcoin to be able to surpass gold but it's really right at the back, coming so strong. So yeah, that's like my simple perspective for Bitcoin, and then the whole breakdown. And we can go into the indexes, right? First, let's just also quickly look at what oil has been doing, right? If I come to the 4-hour, right? I trade oil too from time to time. Oil is very interesting to trade. The last time I traded oil, right, it was also because I saw this range right here, right? I'm gonna break down the range for you guys in a bit. So first off, it was like this range right here, right? You see this one here, and then you see this one here like this, right? So trading in between it, and then if you know chart patterns so well, then you kind of know that this kind of had some formation of inverse head and shoulder embedded with falling wedge. So that's like one way or the other, I expect oil to break out of this channel and then eventually trade upside. But there was going to be a reason for that to happen, and then that reason was the brief moment of chaos that occurred with Israel, Iran, mashup, and then we had oil prices rally up, and then after the whole resolve, then the prices just retraced quickly, and so from there, oil has just been like consolidating in this range for a long time. Personally, I did expect that it was going to like continue up, if I'll be honest, right? I did expect that oil was going to like go up and then perhaps like retest that range again. So I had my guard on to see where I could find a probable entry to buy, but was it yesterday or 2 days ago? I just woke up and then saw that it absolutely took a U-turn. So I'm like, let me probably watch this with a different lens. Then I started seeing that, is it because oil was trading more like in this wedge formation again, right? And then this is like a rising wedge. The one I was showing you here is a falling wedge. So if it's falling, then the resultant effect is the market to go on the upside, right? Falling means is the direction. When it's zigzag like that, the direction, the overall direction. So overall direction you can see is going down, and then overall direction you can see is going up. So if the overall direction says it's going up, then what it means is that you'd usually have price, like trade down, and that's just like in the chart pattern books, or in the chart pattern book of knowledge, and chart pattern is very relevant in today's market. You cannot skip chart pattern, no matter what strategy you're using, whether you're using Wyckoff, whether you're using SMC, whether you're using sniper entry strategy, candlestick formation. Chart pattern occur all the time in the market. It's just a good confluence to add to your perspective when trading as well. You cannot ignore. You cannot say, I don't learn it, I don't use it. No, like it's just part and parcel of what the market behaves. So if you inculcate that with your other relevant strategies, right, whether you're picking the very tiny bit of top or you're picking some other block, whether you're picking some fair value gap, whatever, it's only fair that when you look at this, you use that to guide yourself and then imagine the long-term direction of the market. So this kind of behaves like what? A break and a retest, broke down like that, came back to retest. So does that mean that we'll probably see oil trading downwards? That'd be like my best of guess. So let's see if oil intends to like at least trade into this range. I'll leave the setup looking like this, and then when I'm pretty much convinced with any candle formations around this range, right, and I don't mind, I might decide to like take a short position on this on my own account. So yeah, this would be my perspective for oil. I think it's pretty clear as well. And then we can quickly move on to US30, right? So US30, as you know, it is the Dow Jones, and Dow Jones is like, it measures the 30 average share price of the 30 best companies in the United States, and it's a very strong indicator, because if the Dow is trending downwards, then it means there's a lot of economical let's say unfavorable economic conditions in the US. And then if the Dow is trending upwards, then it means that the economy is booming, and then there's a lot of like excitement generally in the economy, so all the time, every president that comes, especially the US, they want to make sure that the Dow is not trading lower than when they came into office, because then it means that the strong indication means that the economy did not perform or outperform previous government, and it goes on to affect every angle of the economy, because like it's human beings that are working in these companies that are ranked in the Dow 30, and these are 30 companies that even employ majority, right, of people in the year. They have like the major stakes in employment rates in US. You can do your own research about them, search that Dow 30 companies, and then you're going to see Apple in there, Amazon. And these are companies that have like 10,000 workers, 8,000, 20,000 of workers, globally, and then in the US as well. So imagine that the Dow is coming down, and then the implication means that share prices are falling, investors are losing confidence, companies making less profit, and company making less profit also eventually mean that they have to cut down costs, and one of the easiest way to cut down costs is laying over people. So once they start laying over, the ripple effect is just on and on and on, so anytime you want to understand the US market, you want to start from the Dow, right? And so if you look at what is happening now, right, what can you guess, guys? Every time people have been postulating that we're going to have a recession because they expect that the dough is going to sell off. Why? Because they think that the dough has been overly priced, right? And what does overly priced mean? Is that for the last God knows how many years now, right, it's just been trending upwards and upward. The data is failing to load all of it, but let me quickly switch to the weekly and see. Yeah, there's at least what we can get. I think eventually it's going to load anyway, but like people anticipate that what it has been just, you know, gaining extreme momentum and trading too high. So it's just about time, it's just about time we hit some recession, right? And recession means that what they expect the Dow to start trading lower, the Dow Jones to start like trending lower, right? Which is like somebody would call recession, depression, economic depression, whatever it is. And like I think from 2020 was when so many people started anticipating that to happen, right? If you see this huge mark or see this huge downturn here, that was from COVID, right? When COVID, everybody thought COVID was going to be the moment where the Dow started trading lower for the longest of time. Within a few months, it quickly bounced back, traded, surpassed the highs, made another type of formation, kept going, and now we are here, right? So I think that I stopped anticipating, you know, weakness in the economy after I saw that there's so many interventions happening in the US, right? And what are some of the interventions? Anytime you think that there's just not a lot of economic favorabilities, right? You have some of the big controllers, which is like the central bank, the Feds, printing more money to support the economy, giving out, you know, loans and all of that too, and quickly bounces back the economy. So it's like people are saying that it's a bubble in the sense that they've just kept up printing money to hold on the economy, and you get to that point where like inflation is going to bust. There's not going to be relevance in the money again, and then the money they keep printing, and then we'll see finally the Dow breaking down, and some call it like the Great Reset, right? So you can do more research on it as well. But anyway, that's a story for another day. Where we're looking at now is how it's trading. You can see that it's also trading within that same pattern that I've just pointed out in the last 3 setups, right? Where the market just trades in a range like a channel form, right? Goes high, comes down, lower high, lower low, lower high, lower low, right? And this lower high, lower low presented so many beautiful setups, you know, in the last 1 week do, right? If you look here, right? So in fact, what I can do, I can actually hide the 50% level, because these days I like to only focus on the 61 and then 78, right? I want the market to actually come to the 61 and then the 78 region. Yeah, so if you see here, right, what happened? Trended down, hit this level, retraced into this range, and then what happened? Boom, sell off, right? Sell off to this point. So that's like your entry range, right? Especially when you start seeing the candles, you know, hitting this level and making a retracement. And then how will you eventually have expected this setup in the first place, right? Let me also break that down for you. Realize that what prior to that, in fact, let me just go back so that we don't have the settings spoiling. Realize that prior to that, right, the Dow had made this high here, right? And then once it made this high here, as usual, as you know, we mark that as our resistance range, right? Then you have the market like tap into that range, right, and quickly it drops off. So you can see that we have like what, a resistance range created here, right? And that in market structure means that what, the market is anticipating to change direction, right? If you remember from all the lessons that I've taught you, I said that anytime you see like the market hit a particular level, and because it's making like higher lows, you hit that level, higher high, equal highs, right, and then trades downwards, then it means that what the next leg you might want to expect is the market make what, it hits a level, makes a retracement which does not surpass this previous high, and then makes what, a low, right? So generally you're supposed to like expect it. So the pattern is like this if I'm supposed to draw it independently: high, low, high, equal high, low, right, which sometimes supersede the previous low. Then it makes what, a lower high, right, and then makes a lower low, right? So this is how you must always like picture or anticipate it, right? So if you watch what I've illustrated here, and then you're seeing what is happening here, it makes that low, right? And once it has hit that low, right, and then there's 25% retracement, this is where you mark, right, that range, and then expect that what, the market is going to come into this level, right? And then once you find the perfect formation, candle confirmations, I mean, then you can go for what, a short within that range, right? So taps into that range, and then what happens, just drops like that, right? So upon dropping, right, once you see another form of retracement, what do? Rinse and repeat, right? Rinse and repeat, guys. So you see how it happened there. Now you can confirm that what, this market is making lower high and lower lows. So what do? You mark the same range from here to here. You anticipate that what, market will likely come into this range and then drop. But obviously the final bit of confirmation comes from what, the candlestick pattern, taps into it, rinse, repeat, right? And so finally, where are we? We are back here again. Are we going to have another set of rinse and repeat? Only the market will tell, right? So what would I do? Mark from the top here, extend it to the down here, with a bit of a pip away from just tapping into that range again, right? And normally if you'd have like a breakout occurring, you'd have the market come back to make like an equal low, right? Equal low like this somehow, right? Before eventually like breaking out. I said normally, it doesn't mean that all the time though. So this time it could be different, right? But maybe a setup like this would make sense, right? Or I mean, we could just watch this market just like break out straight away like that. Regardless, the candle confirmations or the candle patterns that is going to be happening in that range will give us a bit of a knowledge to know what to anticipate next. But following that rinse, repeat, swing retracement logic, then we'll probably see US30 retrace a little bit, hit this equal low before going up high. So let's keep our eyes on it. But this will be like my anticipation, or this would be like my bias generally, right? And I know people are waiting for gold. But let's keep gold a bit. We'll come back to talk about gold. GBPUSD, very interesting instrument, right? This has been tricky with me, if I'll be honest, because I kind of marked this range of swing high, swing low, swing high, and expected the market to actually retrace, because it's like trending higher now. You can see like it's just been trending high, low. The market is just in generally an uptrend, right? So I expected that with that swing and a retracement, we're going to have like a reversal or a continuation from here, right, from this range. But it hit that range and then consolidated for a long time. And I know that this level of consolidation here was just to get a lot of people soaked into thinking that indeed GBPUSD was going to like buy, right? And but for me particularly, I had not seen any bullish confirmation that was just going to drive me to jump in for a buy. But I know how price action is going to be within this range, especially with people seeing a level like this here as well, anticipating that is it a break and retest market structure type of formation, but we saw that it trended downwards and then now still trading lower, right? So now where are we in present time? In present time, we'll say we are back to these lows right here, right? In present time, we'll say we are back to these lows right here, like this, right? And yesterday, I don't know, that bit of announcement, whether it was a hoax or it was true, it had any bit of truth to it, right? Where like so many news outlets were reporting that Trump was threatening to what's the name, to sack Powell, right, who is the Fed chair, Powell. It kind of got the market shaking a bit, and that's how come we saw this reaction. We saw the same reaction in so many other instruments as well, so it made gold tap, GBPUSD tap into that range, quickly swing, made a huge swing up, and then came back down. So what am I expecting? Will I see some reactions around here for GBPUSD to eventually go up? That'll be like my first interest, right? That'll be like my first expectation. I want to see some formations. I want to see it, reject around these regions and then eventually go up. But if it fails to and then it breaks lower, right, then there'll be like some key levels to also anticipate. Could have it even pushing lower to this level, right, and then perhaps even lower to this level as well. But we'll have to keep our options open and keep our eyes clear, and all we have to do is just like monitor. You could also do some intraday trades when you come to like the 30-minute, the 15-minute, when you see that indeed like this thing is breaking lower and then it's close solidly beneath this range, right? Then you can anticipate what? A quick squeeze out of the market from a few pips. That's if worst case scenario we break lower and then we have a solid confirmation. Ideally, you can use like the 1 hour as well, right? You have a 1 hour candle closing lower, then you could expect, a quick dive to the next low can make easily how many pips? Some 80, 85 pips. It's not bad at all, for a good risk to reward of 1:4, 1:3.54-ish. But yeah, we would have to still observe the formations in that range before. If you want to take a swing position, then this is the perspective you should be looking at, the 4 hour. Then you want to you want to wait for the candles to play around here, give you a strong confirmation, then you go up, right? Okay, somebody said I skipped the US tech. So this is like GBPUSD. We can quickly go back to US tech. I think US tech has the same logic as Dow Jones, right? In fact, we have Dow Jones here, right? We have Dow Jones looking like this, which I've established, and then look at the variation in movement. This is what US tech is looking like. It's also trading in its all-time high at the moment, right? So yesterday, right, also within that same fib range, I did expect that US tech was going to like play around, right? If it come to, let's say, like the 1 hour thereabout, I did expect that what it was going to, you see the swing high and swing low, I did expect that it was going to like what, trade high like this, come into this low, and I started anticipating a buy from this range, right? But again, it was also the same era or moment where we had that announcement that I just spoke about, and they had that market whipping, so it invalidated any entry potential for this sector for me. But right now, you can see on an intraday basis, we are easily approaching this high right here, right? I don't currently have any position on it because like this place was too choppy to find any bit of entry. But if you're aggressive enough, right, then you know where it's heading now. But that would be a bit of a risk to put on at the moment, because the risk to reward will not even make sense. Because if you're trying to jump in here, where will you put your stop loss? Put your stop loss here beneath the low, then you take profit here. That's like the worst type of risk to reward setup that anybody at this level of experience and all the knowledge that I'm sharing with you would want to take, And if you put your stop loss here, say, Kojo, okay, what if I decide to put my stop loss here? Then in that case, the only thing I can say is you're not putting stop loss where stop loss really need to be. You're using your own discretion to set stop loss. And if you use your own discretion to set stop loss, normally what happens is it can whip you out, right, and then still go and fulfill that order. And then you'll be pained thinking, I got a move right, but it took me out before I went, and all of those type of complaining. So it's better to stay clear off from price by putting your stops beneath a range, and that could also mean that they will invalidate the setup generally. But yeah, would want to eventually see USD hit this level, whether it's going to have some type of reaction here, right, to give us some type of intraday trade. It will be interesting to see maybe like rejections, multiple rejections, like you see the way the candles were clustered around here. You could already tell that there was a bit of resistance going on here. So if we have the same type of reactions here where the market is struggling to break low higher, then we could easily find a short squeeze, but once it breaks, let's say the market comes there, hit that level, goes up like this, and then we have like a strong candle like this, right, then guess what, we'll have no option than to think it was going to go even higher and then chase the market up with it like that, right? At that point, it's easy for you to put your stop loss beneath that breakout candle. And then where will you expect the market to go? I would anticipate the next psychological level. If there's 23,000, then let's say 23,500, right, would be ideal. But that's very ambitious to expect. But let's keep our hopes guided, right? Let's keep our hopes guided, and then let's watch how US30 trades within this range. And US30 has become quite a very interesting instrument on Exness as well, right? The lot requirement, I think they had US30 times. No, this is US Tech, right, which is Nasdaq, by the way. So Exness quite recently introduced US30 times 10 and then US Tech times 100, right? If you're watching the instrument to trade, if you choose the times 100, it's like it's like those type of instruments where you put 0.01, but like the pip movements, and then the value per pip is a lot, right? It's like the way the SA guys will put, you see them with 0.01 lot, and then they are making a lot of money because of the instrument. So you can do your own research as well, right? But yeah, you should be careful which one you're trading, by the way. If you trade the times 100 and you're thinking that you're going to put proper risk management, so let me just try with 0.1, it could mean that you're actually placing 1 lot or 10 lots. I don't know the difference. You should do your research very well. I don't know, am I making sense? Do you guys understand what I'm saying though? And this was quite recently reintroduced. It used to be on Exness, they removed it, and then they introduced it back again. So do you understand what I mean though? In the comment, I'm watching to see if you guys understood what I mean with this instrument. So if you're trading it, just if you want to be on the safe side, test it on the demo, right? Test the lot size on the demo to just make sure that you're on the right path, right? Somebody said they don't understand what I'm saying. So if you go to the contract size, yes, I'm talking about the contract size, yes. So people understand what I mean. If you don't understand, you can ask your friends. The contract size on US Tech or NAS 100 is expensive when you choose the US Tech times 100. So they have the normal US Tech, and then they have the US Tech times 100. So make sure that you know which one you are trading. Don't just go and select each one of them on your MetaTrader and then execute, right? That's just by the way. Anyway, somebody said let's look at USDJPY. You can take a quick look at it. Also had the same type of drop because of yesterday's news that I just told you about, and that thing shook the whole market, right? So if you ask me, this pretty looks like a very basic perspective, right? It will be like that basic perspective. At where we are now, there's really nothing to do than to expect the market to come to this range, right? Which is what snipers do. And I've explained the logic around sniper entry so many times. You know, it's like a military man in a war front. You know, if you know where the enemy is going to, why just start wasting bullets, you know, along the way, and then you can miss the target, than rather where you have perfected that they're going to be to get the accurate shot. So here is our sniper range, right? And then we want to see the market eventually come here. If it doesn't come here, fine. And the only reason why I did not pull a fib on this, right, because it doesn't make sense from a market structure point of view. Why? Because the market is already in an up trend, right? So it means that what I am anticipating, that if I pull a fib there, I am anticipating that the market is going to drop lower like this, right? But that means that what the market did not exhibit any reversal formation within this range. There was no equal highs, right? So it will not make sense for me to anticipate that it will run into a fib range and then just drop just like that, right? So I'd rather expect that it makes that high, right? Then maybe make a low before, if anything at all, make like a lower high and then the lower low. That's if that's what the market wants to eventually do anyway, right? But right now I'd rather expect that it makes the high. It could actually make the high and then even break that high as well, right? Let's see, let's look at it from the 4 hour. There's also another high just pending right here, right? Remember that it's still playing around this previous high when it came back to that same level. The market is just trading around that range, so it's good to just have our guards on, right, watching here, and then just also like anticipating the market to come back into that previous high again. So you saw it clearly here because I was on the 1 hour, right? So that will make like for a good intraday trade if it comes there and then it reacts. But yeah, if I were you, I'd rather like be patient and see how things unfold there like that, right? So for the person that asks for USDJPY, I think that explanation should be enough for you. Euro USD. Before I go on Euro USD, right, allow me to touch quickly on DXY, right? Yeah, allow me to touch quickly on DXY. So even though I broke down GBPUSD, this was where I should have started actually from, right? If you look at DXY, this is the DXY high, most recent high, right, before that low, and then this is DXY low right here, right? Before this spike up here, this was how it was looking, right? This is how it was looking, and then if you look at how it's looking now, you can realize that what there is some type of, you know, a wedge formation also to its, you know. And if you're watching this with your naked eye, you easily think that what price should eventually break and come lower, right? And if you want to back it up, you would even back it up with your Fibonacci and say, look at price coming to tap into the 61.8 region or whatever it is, and then eventually drop, right? Now remember, if dollar index is dropping, then it means that with weakness in the dollar, right? Which also means that what the cross pairs with the dollar, which is like GBPUSD, would rather what trend what higher, and then also similar instrument like Euro USD will also trend what higher, right? And let me see, Okay, I'm not able to like split screen. I would have just splitted the screen and then share with you side by side. Probably look for that feature. All right, probably look for that feature if there is, and show you side by side. But yeah, what I'll probably just do is, this is dollar index, right? If you look at GBPUSD here, okay, let me see. So I've reached maximum tabs. So let's say GBP. I have to close some of the tabs, by the way, guys. Let me close some. Let me close the one that we've talked about already. In fact, let's close the ones from here. Yeah, let's quickly come to GBPUSD, right? Remember that I was telling you that when the market was here, I was expecting it to like trade from this range and go up. That was also because the dollar index was also around this range where I was expecting it to come down, right? So I mean, the market has its own reasons. You know, we can only speculate. We cannot determine or force the market to do what it wants to do. You know, as a humble student of the market, it's better to be patient to what the market do its thing and follow along than enforce your own belief system on the market. The earlier you learn this, the better. Somebody is in this comment saying, Kojo, are you promoting investment on Telegram? Never, and I'll never do that. Probably finding yourself in a wrong channel. I've kept this disclaimer that my Telegram channel is probably the only verified Telegram channel in the whole FX space. You know, Telegram actually verified my channel just because I kept reporting that there was a lot of scams. So anytime you've come across my Telegram channel, make sure that there is the verified mark at the top, right? Then there you know that you're in the legitimate channel, right? So right now we have dollar index trading at the tip of the negative 78 retracement range right here, right? And so is it I mean 78 retracement, not negative 78 retracement. Is it going to eventually like come down from this range because it's still like very valid within that range, or is it just going to go up and tap into this place, right? That's a very tricky position for the dollar index to put us in now. But if I'm talking about Euro USD, right, that will be like the way to look at it. Whatever the dollar index does in the next couple of days will be directly related to what the GBPUSD and then Euro USD will also do, you know. So it kind of looks like a direct opposite of it, can't you see? You know, look at how it's just like zigzag and spike down, spike up, and then down again. And look at this, zigzag on the upside, spike down, spike up. You think I just inverted Euro USD when I'm looking at dollar index, but they are literally like different instruments. So there's like a very close relationship, close inverse relationship. So it's also like exactly on this level, right? So I think at this point we just need to be like extremely patient. Let me say, kindly share the legit one. You can go on my Instagram, you know, you'd find the right one and just search Kojo Forex community, you know, or Kojo Forex trades on Telegram, just the one that has check mark or has community members of 198,400. That, I think that should be our current community members. Yeah, but yeah, I'll leave this one here for those of you asking for Euro USD. Now for the one that everybody has been waiting for, or most people have been waiting for, gold. We have barely 10 minutes to finish this live stream, so I'll spend the rest of it on gold, and then I'll spend the rest of it on gold, and then I'll leave some time for questions as well. This morning I fell on the wrong side of gold, by the way, which is just what the market is about from an intraday perspective. Before I even go to the high times, right? I anticipated like there was going to be like a quick pullback from this range, maybe gold making the highs back, right? Because if you look at this, if I plot this high here and then extend it low like this, right, you can see it was just trading beneath it, started breaking out. The setup looked very clean though, the confirmations and everything. If you're looking at if you use kind of confirmations and then you use also like retracements, right, and then you use market structure, right, this is a setup that you easily fall for, right? You see how clean it's looking like that, right? You say, wow, okay, we're easily going to make some 40 pips scaling, 50 pips scaling on gold, or maybe some 90 pips scaling on gold, but yeah, we don't control the market. What happened took us out quickly, and then gold is just like going down. So we'll change our bias and come back. That was just this morning anyway. But before we get into that, let's look at long term, right? Long term, if you are in the Kojo Forex, if you have access to the dashboard, which is like www.kojoforex.com, right there where I post my forecast, you realize that there's a forecast on gold, right, where I said gold was going to hit this level resistance, and where it's going to go next is going to make its way to the low, right? And I did anticipate that if it's making its way to the low, right, then I also did pull a fib from here to here, right, and said that what is gold gonna probably like come into that range eventually, right, and then go up from here, which is like make a continuation on the upside, right? So everybody has been anticipating. And then during the time where I made that setup or made that postulation, then gold was still trading around here like this. So I was like, we have potential of gold reaching this range before going, and then from that time it just be like zigzag and up and down like that. So what do I expect long term? I think it's still valid, because like for the last like 2-3 months now, gold has just been generally consolidating, right? If I zoom in, you can see that what it's just been stuck in this range, right, and not traded outside of this range. And gold is not the one to get stuck for a long time like that. Look at it from here. When it's trending upwards, it's trending heavily, and when it's trending downwards, it's trending heavily. But for the last 5 or 6, let's say 4 or 5 months now, it's just been going sideways within this range for the longest of them. So I think it's probably because there's no major geopolitical event driving it apart from the most recent one we have. But gold is generally driven by political events, so maybe, who knows, something is coming. We don't know, can't tell for now. All we can do is just find intraday setups, and then some daily scalps, daily trades, for now, until like the bigger range has been traded out of, right? And so from a bigger picture perspective, if you're asking me, I think that the picture is clear what I'm expecting, right? Either gold comes into that range or even trades lower back to this level right here, right? Lower back to this level right here. But with what happened yesterday briefly, then it distorts the expectation, right? Here it distorts the expectation, right? And I did give a brief perspective of what people were expecting before that huge spike there, right? And I'll share with you. So the market was trading like this, and then you can see that what it was looking around the time where the move occurred. This was how gold was looking. But not only was it looking like this, we had like a strong bearish candle right here like that, right? And this is a move that I've seen so many times with the market, right? So many times, right? And the market knows this, right? Sometimes, guys, I tell you have to be a contrarian in the market. You have to be a contrarian in the market to be able to win trades, right? I'll share with you. When they say contrarian, do you know what it means? A contrarian is somebody that does the polar opposite of what everybody else is seeing. So the market was looking like this, the candle was looking like this, right? This is the 4 hour, right? Now remember, it was looking like this, but the candle had not closed, right? The candle had not closed. The 4 hour candle had not closed. And remember that if I tell you about how strong the candle confirmations are, then what I mean is directly coming from the closure, not the trade moment, right? See, the market can look like this, so strong, convincing you of what? A continuation lower, right? Ideally, most people expect what? A breakout, right? Because this is like a low and then the market is already trending down, isn't it? So you think that, oh, it's just going to break this one, so let me sell into it, right? Let me sell into it, right? And remember, like, you know, the timeline, the what they call it, the countdown timer on the candle will probably be counting down 4 hours, 3 hours, 2 hours, 1 hour, 15 minutes, 5 minutes. It could even be at just like 1 minute for the candle to close, and the whole formation will change. Don't trust the candle formation until it closes. You get what I mean? That's a very strong point. Don't trust how it's looking within that time range until it actually closes. It could easily get soaked in. So I knew that there was going to be a bit of trap here, you know, going to soak a lot of guys into it, thinking that, okay, gold is going to trade lower. Look at how the candle is looking. I don't want to miss it. FOMO sets in, you know, fear of missing. I think, if I don't jump in now, what if this candle just extends quickly lower like that, right? And sometimes it does okay. You'll be watching it and then before you realize there's like a big one like this, right? But it's better, you know, to stay on the fence and save your capital than be soaked up in FOMO and actually lose your capital, right? So when I saw it just trading here like this, I'm like, okay, here we go. This is where a lot of, you know, market participants are going to expect, you know, a trade lower, right? But I'm like, I might as well be a contrarian, go the opposite. And what do? I actually go deep into the candles, right? Actually go deep into the candles, and then I'm like, I'm going to be watching how the reaction plays out around here. Oh, what did I do? Where is this thing now? Where is this thing now? Let's come to the 4 hour and see. Okay, let me remove this one. Come back to the 15 minutes. Let me refresh this now quickly. Right. Right. So you can see here, right? This was a moment of truth where price came here, right? And then like I said, it was like going lower, just around here. A lot of people were expecting like price was going to what? Break lower. That's just in the 4 hour how the candle was looking like, very solid like that. And guess what? I marked this range, right? I marked this range down. That okay, I want to see how the market will react here. What I did, I actually did put a pending order here, right? Which is like what? A buy limit, right? Do you know what a buy limit order is? Buy limit is when the market comes here, it taps into that price, and then if it goes up, then you're in profit. But if it goes down, then you are in a loss, right? And buy stop, but most of you don't know the orders. Buy stop is when like you put a price there like that, you're expecting that price should just come run into it, pick it, and then go up and put you into profit, right? And then sell limit is when you put the price there like that, you want the market to come into the tap into the price and then come down, right? And then sell stop is when the price is here, the market is already trading downwards, and then you want the market to tap into it and continue lower. So if you didn't know the difference between buy limit, sell limit, buy stop, sell stop, I think this one explains it. So I put a buy limit here, right? I put a buy limit there, and then because I knew that it was going to be very quick, if the market was going to like soak a lot of people in, and then when the market wants to grab you in that range, the candle wick is just like instantaneous, taps you in and quickly pulls back. But what I didn't know was that it was going to coincide with that announcement of Trump and Powell. So this is me just trading off of the back of being a contrarian, and then have the market, quickly tap into that range. Boom. Guys, the profit was instantaneous. You can see what happened here. Like, that's how come you saw that entry there. Instantaneous profit. And then we had it continue even higher, right? And guys, the pip movement from here to here, 500 pips. The quickest, probably the most quickest profit I ever had on gold. So this explains like the setup for all of you that have been wondering, Kojo, how did you get that setup? What were you thinking? What were you seeing? What were you looking at differently? It was a perfect timing of technical analysis coinciding with fundamental. And I've said this in so many live streams and in so many YouTube videos and in so many live sessions that the technical analysis, it always finds a way to blend perfectly with the fundamental. If you see, right, if we extend this to this level right here, right, eventually that was like the last mark it had to make before coming down, right? Again, technical dancing to the tune of what? Fundamental. So I saw some guys who shorted from this range as well, right? So while some bought from here and made huge profit, some also sold from here and made, but me, I was okay. It's like I'm not going to be doubling down on the market, for no reason. So both ends actually did win. Those that bought from here made huge money. Those that sold from here also did make huge money. And where did they sell from? They sold from the last high right here after the market tapped into it. See, it will not make sense to sell here because there's also another immediate high here. So if you're so quick to just charge and then start selling off from here, you'd have this pip to deal with. But if I zoom out, right, you see that it's such a clear wave on the upside. There's really no trading range above here. So if there's like such a huge and quick spike like that and the market wants to quickly make a U-turn, it will likely use the last one where there's no trading above that range there again. So for anybody that's looking for that deep dive into how I got that setup, I think this one does it. Nonetheless, remember that I've also made like the higher time frame judgment and expectation. So you look at both worlds accordingly, right? And right now I've made my expectations known to you. We did try out the first one here, it didn't go well, so probably look at trying another one again, for an intraday trade, right? We could see how the market will come into even this retracement range as it is now. If eventually it's going to have like some formation like this, right, maybe another big candle formation like this, then that would be like another beautiful setup for us to like expect higher. But it will all come off after we see a very, very, very confirmed candle formation. So we'll still be monitoring this range for gold, but generally I think you've learned a lot about contrarian perspective, going against the odds, and the long-term analysis of gold and intraday trade and scalping and everything. This brings us to the end of today's live stream. I know you guys learned a lot. You have just barely 1 minute or two to ask me any question before I leave. Somebody say, well, today's economic calendar likely affect some currency. To be fair, I've not had a look at the economic calendar just yet, right? But we can quickly do that now. What do we have? What do we have in today's economic calendar? Unemployment claims. I don't see any major thing that is just going to like be disruptive on the markets today. These are basically average data, not high. This is unemployment claim, not unemployment rate. So yeah, the airwaves is clear. Feel free to post your question. Okay, yeah, guys, feel free to post your question. How am I deliberately pulling your legs, guys? What helps you confirm a buy or sell? Kind of confirmations, I've taught that in so many YouTube videos. Even my most recent YouTube video, you can go there, you find some of them there as well. The last 3 YouTube videos, I did talk about that. Please share. They are all on YouTube, right? Guys, if there's no more questions, thank you so much for tuning in, for making time for this. I hope you learned a lot, and I'm actually going to see you guys soon again. It's not going to be after 1 month. I think next week I'm going to come on again, but I'm going to make the announcement clearer on the channel even prior. So tune in next week when announcement is made, and thank you for coming through, right? I'll see you guys again soon. Peace.